everyone out there. Welcome to the BMM bunker for our Alt Doc presentation today. My name is Glenn Gillespie. I'm the BDM for Queensland and South Australia. To my left, we have Murray Cowan, our Managing Director.
Morning all.
On my right, who is out of picture, we have Andrew Costello, who is our Victorian BDM. And way on the side over here, off the end of the earth, is Shane, our Queensland and Western Australian BDM. So we're all adequately socially distanced here, and we're ready to go. So welcome to this Alt Doc presentation. It's a presentation that I've done in the flesh many times. This is the first time we've tried to do it to a bigger national audience. And just want to go through a few housekeeping things first before we get underway. You are able to type questions during the presentation, but we won't respond to them until the end of the presentation. So feel free though to type those questions in, and we will get to as many as we can afterwards. There's no real time limit here. This presentation will go for about an hour, and then we'll allow some time for questions after that. So feel free to type in. We'll get to as many as we can at the end. And toilets is to the left, out the back door. Sorry, this is a physical presentation.
And the fire exit.
And the fire exits, yeah. Anyway, without any further ado, I'll just hand over to our Managing Director, Murray Cowan, for a short introduction, and then back to me.
Very good, thanks Glenn. Thanks everybody for joining us today. A shout out to our friends in Melbourne. Difficult times down there. Stay safe and stay strong. Joining us today are both accredited and not accredited brokers. So Glenn's going to run the session with that in mind as well. And for brokers that are not accredited with us as yet, there'll be some instructions towards the end of the session how you can gain accreditation. So over the last 10 years, we've regularly run training sessions in probably most of the capital cities and major cities around the country, and perhaps had 15 to 30 or 40 at best people join us for some of those sessions. So it's great to be able to do a session like this. The numbers are approaching 200 that have logged on now, a lot more than that registered, but some of them might be joining us throughout the session. Very efficient use of time for us and for you guys as well. Saves transport, accommodation, flights, all that sort of additional cost. There is quite a lot to take in for those that may not have dealt with mortgage managers much in the past. We do have multiple funders, and at times Glenn may talk about some of the features that are evident on one product or exist on one product. They may not be available on all products, so just keep that in mind. There's a lot of information to take in. Today we're just going to talk about Alt Doc lending, and we do have prime full doc loans available as well. So mainly Alt Doc lending and some other options for self-employed borrowers there as well. Question and answer at the end, as Glenn has mentioned, and yep, feel free to type your questions in, again, as Glenn has said, and they'll be answered at a later stage. So I'll hand back to Glenn now. Hopefully you enjoy the session, and we can look forward to providing service to you all. And thanks very much for those that have supported us in the past. Look forward to supporting you going forward. Thank you.
Thanks, Murray. So we'll get the presentation underway. We are going to share a PowerPoint presentation on the screen. So unfortunately, you're not going to get to look at me all that much, which I'm sure is shattering for you all out there. But I know you're all out there. But yeah, with PowerPoint presentations and me, I do jump around a little bit. I actually dislike PowerPoint presentations, but it is a guide in the background for you to read while I'm talking. So sometimes what I'm talking about may not be relevant to what's on the screen, but you will get this presentation after it's concluded, and it will also be recorded and put on our YouTube channel with all the rest of our content, which is number 0 at the moment. So it will be available afterwards. So it is a bit of a guide, but I will jump around a little bit with what I do talk about. So I'll just, if I can share that screen now, Andrew, my trusty assistant on the right. And we'll go from there. Now, while Andrew is sharing the screen, I'll basically just give you a brief introduction about Alt Doc. I love Alt Doc lending. I love this form of lending. I love talking about Alt Doc loans because essentially what it does is it opens up a whole new opportunity for self-employed applicants. So I tend to think self-employed borrowers, they are a bit victimised in this industry, particularly at the moment. We'll get on to COVID a little bit later. Self-employed applicants are the driver of our economy. They're the biggest employer of people in the economy, and therefore I like, and I have a bit of a passion for Alt Doc loans because I think this is a genuine avenue for self-employed applicants to access funding. And I also think that it's a great opportunity for brokers to access options that obviously some of the major lenders aren't dealing with anymore. So it's a great opportunity for us, great opportunity for brokers, and great opportunity for applicants to access funding. So I love Alt Doc lending. And as I said, self-employed applicants are a little bit, I think, victimised in the market at times. Obviously, sometimes a lot tougher. But with Alt Doc loans, it is a genuine opportunity to help self-employed applicants access funds in the market with an alternative way of verifying their income, thus the name Alt Doc. Now, from a historical perspective, Alt Doc loans were called Low Doc loans in the past. So before the GFC, it was a very popular form of lending. But over time and through regulation, it's certainly not the old or the low docs as they used to be known. Low docs used to be, really just the applicants self-declared their income with very little verification after that. But licensing has meant that obviously most of these loans now are coded, which means we have to verify the income. And we'll go into how we do that in this presentation. Another reason I like to do this presentation is that there has been a negative perception of low doc, alt doc loans for a number of years. A lot of people think it's the way it was in the past. So the term liar doc has been bandied in the past. So as a result, some aggregator and sub-aggregation groups have been in the past very reluctant for their brokers to access this type of lending. I think that's a little bit unfair, and then part of this presentation is trying to help brokers that maybe have been reluctant in the past to access this type of funding to now open their minds to it, because as you'll see, there is still a lot of detail that goes into these loans to verify that they're genuine, and that also they're a genuine, obviously, way to assist self-employed applicants. So there's nothing shady, there's nothing dodgy going on here. We just want to help genuine self-employed applicants who have genuine businesses access funding. So I am quite passionate about breaking down the walls of this type of lending and making brokers more comfortable in terms of dealing with this market. So today, what we're basically going to talk about is briefly about us. Then we're going to talk about the nitty-gritty with Alt Doc loans, which is what an Alt Doc applicant looks like, how we assess the income, product options, including some specials at the moment. And I'm not all going to sell the sizzle. I'm also going to sell, obviously, the some of the problems that we get with low doc and alt doc loans, and we'll go through those traps as well, and a bit of an addition to the traps this time around with COVID-19 to be discussed. So we'll get on to the presentation now. There's a bit of a lag here, I think, Andrew, when I press this clicker, but it should go to the next screen. Essentially, why choose us? Why choose BMM? Well, particularly with alt doc loans, we're a bit of a market leader in this space. We've been very good in this space for many years. We've specialised in dealing with alt doc borrowers and self-employed borrowers for many years. And as a result, we're very good at it. And because we're very good at it, we've developed not only a wide product range to suit this target market, but we've also developed a specific skill set to be able to assess these loans and give you a decision whether it's going to work or not, pretty much from the outset. So I've been with this business 15 years. Andrew's been here over 5 years. And Shane to my left has only been here a short time, but was ex-RAM. So we're all very experienced in dealing with alt doc, low doc loans over that time. So even from the scenario stage, we're going to be able to have a very good feel whether your situation is going to work or not. So we've got the skill, we've got the expertise, and then we've got the product range. Over 20 different alt doc products through a number of different funding channels. So because of that, we're in a very good position to give you the best options available for alt doc loans. And many of our brokers obviously don't deal a lot in this space and haven't dealt with a low doc loan or an alt doc loan for a long time. So part of our job is obviously make you feel comfortable through that process as well. We don't expect you're going to have a lot of expertise in this space. A lot of brokers might be lucky to see 1 or 2 that fit this space in a year. So we do understand that there's a little bit more support required, and that's what we're here for. So BMM, from that perspective, does like this business, and as a mortgage manager, we're very good in this space in general. We've got a number of different products, a number of different funders, which means that we are able to offer multiple options and the best option for your situation. So we get wholesale funding from a number of options. We're not going to go through them all today, but yeah, we do have a wide range which enables us to give you the best rate and fees for your particular scenario. So I will go on to basically what an alt doc loan looks like and what an alt doc applicant looks like. And look, from our perspective, an Alt Doc applicant is someone that's self-employed. We can't do a PAYG applicant with this type of loan. You must be self-employed. So that's probably the first important thing to look for with an Alt Doc applicant. Just apologies, we are having trouble getting the screen to move, so I will talk ahead. We can just skip ahead of that, please, Andrew. Yeah. So just skip ahead of that, please. Yeah. So
far behind am I?
I'm making you work.
Sorry.
I'm making you work this morning. That's noted about that. So as I said, you must be self-employed. Now, obviously, not all self-employed applicants are going to have perfect last 2 years financials. So where the Alt Doc loans come into the picture is if you've got an self-employed applicant that has maybe, one decent year of financials, or they've maybe haven't even got any financials done at all. And so you can't rely on financials to verify their income. So that is one situation where we're going to see a lot of Alt Doc loans. If you've been trading less than 2 years, it's definitely a sweet spot with Alt Doc loans. We'll get into that in more detail shortly. As I mentioned, we're not expecting to see tax returns. We don't want to see tax returns with this type of lending. A lot of people say to me, well, isn't it dodgy, or isn't it a bit strange you're not using tax returns to verify income? And I basically say, well, what we're looking for with these self-employed applicants is the performance of the business over the last 6 to 12 months. So we're not really interested in what's happened with 2019, particularly we're not interested in what's happened over a year ago. We're interested in the business in the last 6 to 12 months. So it really suits those self-employed applicants where they might have had a bit of a lull a year or two ago, or they've bought a business, or they've added more staff, got a new contract. There's many reasons why. But yeah, their business has really gone, quite well the last 6 to 12 months, and obviously the financials and tax returns aren't going to verify it. Now, obviously the first thing people are going to ask, my business is going great. Why can't I access a fully verified loan? Well, obviously the easiest explanation is, well, you can run off and do tax returns now, but a lot of these applicants don't want to do that. They obviously don't want to pay tax right now. So it's a solution for now so they can move on with their lives, get what they need to get done. And then down the track, it's obviously great from a broker perspective because you'll get a second bite of the cherry. We do a solution now, and then we move on, obviously, 6 to 12 months, they can obviously look to another option with us or elsewhere, and then get at their lower rate with their tax returns. So it's good from a broking perspective in the terms that, you do get to provide a solution now and also work with them in the future for moving to the next step. So with Alt Doc loans, we do get a lot of scenarios, and often with brokers, we don't expect you're going to have all the answers straight away. So there's a number of questions we're going to ask pretty much straight up, so we can offer the best rate and fee. As I said, we've got over 20 options, but not all of them are going to suit each scenario. And with Alt Doc loans, there is a number of different questions and a number of different complexities we need to be able to clarify before we can work out what the best product is for your applicant. So the first and most important question is always going to be ABN and GST registration length. Now, if you've got an ABN over 2 years, you'll be able to have access to the best rates in the market. But if your ABN is less than 2 years, it doesn't mean you're out of the picture at all. We can do ABNs from as little as 6 months. So that is something we can do. And again, it just lends to the fact that we're looking at the performance of the business over 6 to 12 months. We're not looking at over 2 years, 3 years. So shorter term ABNs aren't a problem. Bear in mind though, that obviously if your rates and fees will be impacted by ABN and GST registration length, and we'll go into that in a second. GST registration length is also important. So often brokers will say, oh, they've got a 4-year ABN, but then we don't look at the GST registration length. Well, we do need to ask that question because, again, product can be influenced by GST registration length, and it can also be influenced by what income they're declaring, whether it makes sense or not. Other question we're going to need to ask is LVR. So we need to know, obviously, what the LVR is. Your best rates and fees on Alt Doc loans are going to be 80% LVR and below. Once you go over 80%, the rate is quite high. In fact, to the point where it will turn off most applicants. But 80% or below is where we need to be. So obviously at 80%, we can quote confidently there. But if you're at 60% or less, that will also influence rate and fee. In some cases, there'll be no risk fee if you get the LVR less than 60%. So we do need to know the LVR. The next most important question we're going to ask is how are we going to verify the income? So like I said before, we're not interested in tax returns, but we are needing at least one of 3 things to verify the income. So it's either last 2 quarters BAS or an accountant letter, or last 6 months business bank statements? That's the most important question we need to ask here. It doesn't necessarily impact product and rate, although there are some options out there where we can get 2 forms of income verification, and that will obviously result in a lower rate. So that's very difficult to get sometimes, to get 2 forms of income verification that match or complement each other. So really, most times we're just going to make sure we need to have one of these. And again, I'll talk about each one of those options and what we look for shortly. We're going to ask about the location of the security and type of security. It goes without saying that Alt Doc loans have a little bit more flexibility in policy, but part of the way we manage risk is through the location of the property and making sure that we're not going too far out of metropolitan and regional areas. If you're in a metropolitan area, you're not going to have a problem getting up to 80–90% LVR on an Alt Doc loan. But once you get into certain regional areas, it can be a little bit more restricted, and often you'll be restricted to 70% LVR. So we're going to ask that question. Look, there's no real definitive location guide that we have. You're really going to have a conversation with the BDM. With different funding sources and products, we have different location guides. So talk to us if you have got a concern about an area. We're next going to ask about the purpose of the loan. So there's obviously purchases aren't an issue. But if you're looking to do a refinance with cash out or pay out private debts, etc., again, this can influence the product that is most suitable. So again, we're going to ask that question to make sure we get the right product for your applicant. It goes without saying credit history is important. I just do want to emphasize that if you're not clean credit, it's not 2 strikes and you're out. So a lot of brokers think, oh, it's an Alt Doc loan, but they've got some adverse credit history, so we can't help them. That is not true. If you do have adverse credit history on an Alt Doc loan, there is no issues with us still finding a solution for you, provided there's a bit of a gap between when the issues were and now on the credit history. I'll talk a bit more about that in detail later. And I guess the other problems we get around Alt Doc loans is how or what income are we self-certifying. So with Alt Doc loans, your applicant needs to self-declare an income, which is usually on a separate form. And then they support it with one of the BAS account letter or business bank statements. Now, often where applicants get confused, and brokers as well, is, oh, well, they've got rental income, so we can self-declare that as well, for example. Well, no, you can't self-declare anything that we can verify without using tax returns. And in the case, we can do that obviously with rental income. So we need to make sure that what you're declaring is just the business income and nothing else, such as rental income or distributions from non-trading entities, etc. So we're just going to move to the next slide now. And there is a bit of a time lag here. So we've got a very, very, very big time lag. So with the type of questions we ask, it obviously does have a bearing on the rate and fees that we're going to be able to offer a particular product. Now, with ABN and GST registration, like I said, we can go up to 6-month ABN, but at 6-month ABN, your rate's going to be quite high, around 6.8%. Once you get above a 1-year ABN, you get up to sort of a 5% rate. And then once you get up to a 2-year ABN, your rate's in the 4s. So I think 4.69 is probably our best rate at the moment. Or sorry, 4.44 is our best rate at 80% LVR. So that's a bit of an example there of how just those minor issues that look minor on the questions we ask can really have a massive influence on the rate. As you can see, over 2% spread there on the rate. And the same goes with business purpose, cash out, etc. Paying at ATO debt. I mean, they all have an influence on the rate. So that's why we ask those questions, because it's not just a matter of 10 or 20 point difference in rate. It can matter of 2–3% difference in the rate. So let's get down to how we assess Alt Doc loans. And as I said before, they self-declare their income and they provide one of 3 things generally to support that income. The first is BAS. Now, we only really require last 2 quarters to verify the income. And we only really ask for more than that, like 4 quarters, if there's a real big inconsistency between the 2 quarters. Now, often you'll have a situation where some companies are seasonal, so you are going to have certain instances where the sales, there's a big discrepancy from one quarter to the next. In that situation, we're going to ask for 4 quarters. But if you've got generally 2 reasonably consistent quarters, we're not going to usually ask for any more than 2 quarters VAS. So obviously the common question I'm asked by brokers, well, how do we work out the income from the VAS? Well, how we do it is it's basic. It's sales minus expenses. There's a number of different calculations to work out how you get expenses. Obviously, sales is easy to work out, but expenses is a little bit more tricky these days because the VAS statements have no requirement now to include non-capital purchases, which is what we used to take away in the past. And obviously, non-capital purchases are the non-recurring, recurring expenses that happen from quarter to quarter. So these days, what we do is we get the owed by ATO figure, which is on the VAS, and we divide that by 9.09. That gives us basically what your non-capital purchases were in the past. And then we just take that away from the sales, and then we also take away any wages if they're paid to other applicants, other parties in the business. Hopefully then, we're left with a surplus, which over 2 quarters then will annualise to see if it matches the figure the applicant has self-declared. Up there, we don't, as you can see on that slide, we don't operate under a percentage rule. There used to be a rule where you take 40% of the sales. I believe some lenders still look at that now. And that is not the case anymore with us. So that is the rule we use there. The next way we can verify income is via an accountant letter. Now, accountant letters on the face of it sound like the most easy or the most simple option. Don't have to get statements or anything like that. But it actually can be quite onerous depending on what accountant letter is used, because many accountants out there don't want to complete the letter. And it's often not because they don't believe in the client, it's just because they don't believe in completing forms full stop. So we do have a number of different accountant letter templates that we have that can try and get around this issue. So for brokers, it needs to be important to understand that, look, you've got to have a conversation with the applicant from the word go if you are going to use an accountant letter, but to make sure their accountant is comfortable with completing an accountant letter. So they need to be comfortable completing the accountant letter. And they also need to be comfortable having a conversation with an underwriter, which will happen in the application process, to ensure they are comfortable talking to an underwriter about the applicant's business and income. So it's not just a matter of getting the letter and sending it in and then forgetting about it. There is that check involved with the underwriter. It's also important to remember that accountants must be registered on the Tax Practitioners Board. Now, this is an easy document to look up on websites. But that means that they're basically available to do BAS returns. So, because from our perspective, you need to be on that board, you need to be doing BAS or have the ability to do BAS to be able to confidently talk about the day-to-day operation of the business. But if we can get that sorted out and we get those ticks done, then these fly through 9 out of 10 times pretty well. Probably 1 out of 10, we get a situation where an accountant doesn't want to verbally support what they've put down on paper, but it's pretty rare. And in most of our submissions to brokers, when we do assess the loan, we do make sure we point out from the word go that the accountant will have to talk verbally with an underwriter to verify that income. If you do have issues with an accountant completing a letter, please talk to us, because we, as I said, we do have varying letters. We're going to talk about our flagship product, Capital Uber, shortly, which has a very user-friendly letter, which accountants are more than happy most cases to sign, because the accountant doesn't have to put an income down on the letter. We have other letters from other funding sources where they do have to put an income down on the letter, and this sometimes can cause some issues. So again, if you have been given a no initially with a letter that you've been provided from elsewhere, please contact us, because we do have options which may be more palatable to the accountant. The last option to verify income is via business bank statements. So this is the last 6 month business bank statements for the business. And the way we calculate these is pretty simple. It's just credits minus debits over 6 months and annualising the surplus. Now, I would say business bank statements normally are our least preferred option, because they often provide probably too much of a window into what's going on in the business. And many businesses, of course, also run personal expenses out of business accounts as well, which makes it very difficult for us to work out what's going on as far as the business profitability is concerned. What's happened recently with COVID, however, particularly if you're in an impacted industry or in Victoria, is that these have become sort of almost mandatory for new applications at the moment. I'll get into the impact on COVID shortly, but while they're our least preferred option, at the moment with some businesses in some locations, they are a necessary evil. So I'll talk about that more in detail later. But if we can get away with not using them, we will, because as I said, they often don't reflect the true position of the business. So we'll talk about product now, because as I mentioned before, product is highly dependent on the number of questions that we asked initially in those 2 slides ago around ABN, cash out purposes, etc. So as I said many times now, we're going to have 20 different products. So there's a lot of options. And as I said, they're not going to be always suitable to each option. So it's always about asking all those questions up front from us and you of your applicant to make sure we get the right product. As I mentioned earlier, your best rates are going to be 80% or below. Your best rates are going to be 2-year ABN and below. And obviously location will also be influenced by rate and fee. The thing I always like to talk about on this slide is that it's a bit of an unknown for many brokers, is the concept of a risk fee. So there are risk fees almost always on Alt Doc loans above 70% LVR. You'll get the odd special here and there where you don't need to pay a risk fee above 70%, but generally they're always payable above 70. And in many cases, they're going to be payable below 70, depending on the product and circumstances. So a risk fee it's like LMI. It's basically a percentage of the loan, which you can capitalise onto the loan. And it's really just basically just a form of mortgage insurance, although these loans, of course, are not mortgage insured. There's no real way to get around them unless there's a special on, or you can get the LVR down. We do have one product where we can provide 2 forms of income verification. You can get away with not having it. But like I said, it's often difficult in the Alt Doc space to provide 2 forms of income verification that match each other, because BAS and an account letter sometimes don't often marry up, or BAS and business bank statements don't often marry up. So yeah, that is an issue with 2 forms of income verification. Security type is also an issue with Alt Doc loans. So as you can see, we can do vacant land, but we can't do construction now, unfortunately. Well, we can do construction, but it's via a funder that is relatively accessible by all brokers. But so vacant land is really, as far as we're concerned, our main selling point now as far as looking at land and construction loans. I bear in mind, options are very limited with vacant land, so your rate and fees are often going to be much higher. But we are doing them, and we are doing cash out against them in some cases, so it is worth remembering that if you have got vacant land and it's in a good location, that is an option. And like I said before, if there is credit impairment, it's not a 2 or 3 strikes rule and you're out. Just because you're Alt Doc doesn't mean there can't be some flexibility. There is flexibility, particularly if your credit impairment is more than 2 years. So if it's been listed more than 2 years, there is that flexibility there. If you're less than 2 years, it can still be looked at, but obviously we're going to need to make sure that whatever that issue is in the past. So just bear that in mind, credit impairment. There is that 2-year sort of boundary as far as when it was listed and when it wasn't listed. But again, just want to reiterate that there's a lot of options there, and a lot of brokers might be bewildered by it, but we're here to help you. Alt Doc, Low Doc lending is a great opportunity for brokers at the moment. There's a number of lenders that have pulled out of this space in recent times, and the ANZ being the most, best known one that's pulled out of Low Doc or Alt Doc lending recently. But it's still a great opportunity for brokers in this space, and don't be put off by it. We're here to help you. We're very experienced, and it's a great opportunity because, in my opinion, Alt Doc loans are going to become even more popular in the coming year and a half, because there's going to be a lot of businesses where the 2020 financials and tax returns aren't going to look great. Let's face it, a lot of businesses are going to have some impact or have had some impact from COVID shutdowns, but business is going to pick up in many parts of Australia very quickly after that, and probably has in many parts already. So looking at the last 6 to 12 months is going to be vital for a lot of businesses to be able to access finance through Alt Doc loans. And even if you haven't had a lot of experience in dealing with Alt Doc loans, it's a real opportunity for brokers to get out there and chase this type of business, because you're going to see a lot more business out there in this space. So with purposes, I think we've probably mostly talked about this, but these are the most popular purposes that we see for Alt Doc loans. And without a doubt, other than doing your standard purchases, the most popular thing we see is cash out. And cash out often for business purpose. So a lot of applicants have good equity, or good self-employed applicants have a lot of equity built up in their property. They've got good businesses, but it's got to the point now where they need money to either buy stock, expand their business. There can be a raft of reasons. Pay down some debt in the business. It can be multiple purposes, but that's probably the most popular thing we see, and probably for brokers, that's probably what you're going to see most. And we're more than happy to do cash out unlimited for business purpose. The only thing that we're not real keen on as far as cash out goes is if they say it's for working capital. So we don't want to see situations where businesses are going, I've just got a bit of a cash flow crisis and I just need, 100 to get me through. We don't want to hear that. What we are happy to hear is we're going well, we need to buy stock, we need to buy equipment, we want to pay out this other loan. That's what we want to hear. So we want to buy a complementary business. We love those. So that's probably the most popular thing you're going to see when you get Alt Doc applicants is this sort of purpose other than purchases. And to reiterate, we're more than happy for cash out unlimited for business purpose. Probably the most other popular thing we see at the moment is consolidating tax debt. Again, more than happy to do tax debt consolidation. I know many lenders have a bit of an aversion to tax debt, but from my perspective in particular, if you've got a tax debt, it means you've had a decent business running at some point in the past. So we're more than happy to look at tax debt, and we have products where you're not penalised further for being an Alt Doc and also having a tax debt. So we're not loading the rate, and I'll talk about that shortly. Vacant land purchases and refinances are very popular at the moment. Obviously, there's a lot of people sitting on vacant land around the place, including builders in many cases that are looking to get cash out to fund the next part of their business or the next build for a builder. We will do builders, vacant land cash out in particular, but we're not obviously going to have anything to do with whatever they're building on another property. We're just going to give them the cash out and off they go. Favourable purchases are something that we've seen a bit more recently that's quite popular at the moment as well. A lot of obviously parents wanting to gift equity to their children, their self-employed children. So that's something as well. That just because it's an Alt Doc doesn't mean we can't do it. You certainly can do it, and you can do it up to 80% LVR. So they're probably the most popular sort of purposes we see at the moment. I guess there's other sort of less popular ones also. So don't close your mind to any opportunity in the self-employed Alt Doc space. Chances are, if someone's asked you that question, we will be able to accommodate it in some shape or form. So I want to just move now to product. I'm not going to, obviously we've got 20 products. I'm not going to go through 20 different products today. That would just put everyone to sleep. So I'm just going to go through 2 or 3 of our top selling products and what their specific benefit is, and then we'll move on. And we're going to talk about our Capital Specialist suite of products first. Now, Capital Specialist is by our RedZ funding. We've got a very good relationship with RedZ, and in many cases, brokers can't access RedZ directly. They don't have a very big direct base at all with brokers. So in many cases, you're only going to be able to access RedZ through us. They're an excellent self-employed lender, very flexible, and we've written many loans here in the past for self-employed that have been knocked back elsewhere and would not have got up elsewhere if not for, obviously, the flexibility in their credit policy. RedZ, for those that don't know them, they've been around for quite a while, around 15 years, and they're also the current sponsor of the Melbourne Storm. So they're a bit like the Melbourne Storm in many ways. They're obviously both, targeting difficult markets. Obviously, RedZ targeting the Alt Doc market, Melbourne Storm targeting the Melbourne market, and I've also heard on the grapevine RedZ staff like to wrestle as well, so I'm going to share that as well. Don't tell them I said that though. So what's so great about this is the RedZ product, or what we call our Capital Specialist products, is you can see the flexibility here. The cash out for business use, they consolidate ATO debt without loading the rate any further. And probably the number one feature is the accountant letter. Their accountant letter is very user-friendly. Don't need to put, or the accountant doesn't need to put an income on the accountant letter, which I've said earlier can be a little bit of a barrier to some accountants completing the letter. So that's what we like with this product. As I said, it doesn't mean that there's less verification. I mean, the accountant's still got to verify it verbally. But yeah, obviously, if we can get over the accountant completing the form part, the rest of it should usually falls into place reasonably readily. So there's also another benefit with our range at the moment is there is a current promo where there's the 2020 fee discount rebate until the end of September. So that does make a big difference as well. There are fees, obviously, with Alt Doc loans. We've talked about risk fees previously. There's establishment fee as well, which is normally $6.95, and settlement fee usually at least $5.50. So that 2020 discount goes a long way to wiping a lot of those upfront fees out. So that is quite popular with our brokers at the moment when you combine that with the user-friendly accountant letter and things like paying out ATO debt and business purpose cash out. The flagship product with the capital specialist range is the Uber product. As you can see, the rates aren't too horrendous there, in the fours, so 4.69 up to 80% LVR. And those rates are the same if you're paying at ATO debt. So I know there's a couple other funding sources we have, such as Resimac, for example, that won't give you the prime rate. If you're paying at ATO debt, they'll step you up to the specialist product. This product does not do that, so that's the rate you get regardless of what you're doing. So if you're paying at tax debt, that's the rate. Using business purpose cash out, that's the rate. And the promotion is also applicable to that product. So this is as the flagship product. We sell a lot of this product. And again, many of those features, including the user-friendly accountant letter, is the reason why we turn over a fair bit of volume in this space. And I do want to emphasize also the quite flexible product, credit policy. So that was our capital specialist product or capital Uber product. The second of the products, I'll talk about three today. The second of our most popular selling products is our premium power pack product. It's got a lower rate, and as you can see, it also has a lower risk fee up to 70% LVR. So with the capital Uber product we saw before, you're going to be paying a risk fee of 1% on that product. With this product up to 70%, there is a lower risk fee. Now, I just want to talk about some of the variations, though, between this and the previous product. With the capital Uber product, there is flexibility around GST registration. So, provided it makes sense, we don't need to see GST registration for a long period if that's how the business has been structured. Now, you get situations where, obviously, if the turnover hasn't increased by over 75,000 businesses, you don't need to register for GST. And we're quite flexible around that. If it makes sense what the applicant has declared, that they wouldn't have needed to register for GST until they did, that's fine with that particular product, the capital Uber product. With this product, however, you do need to be GST registered for at least 12 months regardless. So it is important to remember that sometimes with a lower rate and fees, there are more conditions. So with this product, you are going to pay a lower rate and fees, but you've got to make sure the GST registration looks right. And the account letter with this product is also more onerous. So if you've got an account that's not happy to answer a number of questions on a form and also declare an income in writing, this won't be the product for you. But if we can get over those issues, then there is certainly no issue at all with getting that lower rate and fee. But I do like to tell brokers that sometimes the lowest rate and fee in the Alt Doc space is not the best solution. So we always think of ourselves here at BMM as solution providers. So we're not just going to give you the best rate and fee if it's not going to be suitable. We're not going to put it in the pipe here and then have a problem later on if we can glaringly see that it's not going to fit that particular product. And I think it's important when you're shopping around Alt Doc loans with lenders to make sure that you do probably get all the terms and conditions with what it takes to get that rate and fee. And one thing I do see quite often is GST registration catching up a lot of applications with other funders. If we do need, with the premium product, to step it up to pay at ATO debt or to do things like one-day discharge bankrupt, then we have an option there, and you will pay a higher rate and you will pay higher fees, but it can be done. One-day discharge bankrupts is quite popular in the PAYG space, but you're not going to see too many of them in the Alt Doc self-employed space. Obviously, they shouldn't have been self-employed for any great period of time if they are a discharged or recently discharged bankrupt. So you're not going to see too much of that in this Alt Doc space. But for PAYG applicants, bear in mind that we can do one-day discharge bankruptcy. With this product too, we can go up to 90% LVR. Yes, you can go up to 90% LVR on Alt Doc loans, but as I stressed earlier, you're going to be paying a much higher rate in fees. So at 90% LVR, for example, the rate's 6.54. And your risk fee is not 1%, it's 2%. So it is basically priced for risk. Okay. The last product we're going to talk about, the last of the three, is called our Flexi product. And this is the one where you can provide two forms of income verification and get quite a low rate, as you can see from 4.01, that's very sharp for an Alt Doc loan, and no risk fees up to 70% LVR. But as I stressed before, they want their pound of flesh. So you've got to have two forms of income verification. The accountant letter with this particular option is quite onerous, and you can't have business purpose cash out, and you can't pay ATO debt out with this product. So it's more limited as far as what you can do purpose-wise. It's more onerous as far as the income verification, but the option is there. So again, we'll always explore these options with you. If you want to avoid risk fee, we'll give you the option, and then really it's up to the applicant and the accountant to work out if we can get it to where we need to get them the lowest rate and fee. So again, it's a conversation we often have with brokers from the outset here. Can we make this happen? And we'll ask the right questions, and we'll come up with a solution that best suits you and your applicant. I'm just going to move to the next slide. That's it for product. So it's not just about residential Alt Doc loans. We can also do commercial Alt Doc loans. And commercial Alt Doc has similar policy to residential Alt Doc. You only need to provide one form of income verification. You can have ABNs from as little as 12 months. You can get cash out for business purpose. You can pay an ATO debt. So you can do all those things that we can do residentially, we can do commercially. Obviously, you're not going to get up to 80% LVR. We're maxing at 70% LVR on Alt Doc commercial at the moment. But just want to reiterate that it's not just residential, it's also commercial, and there are plenty of opportunities in the commercial space at the moment for Alt Doc. Seeing a lot of Alt Doc applicants looking to downsize their premises, which means the possibility of buying their own premises is now an option for them. So just because, again, they haven't got tax returns and financials, doesn't mean that we can't do the loan on a commercial basis. Now, these loans aren't more onerous. They're usually set and forget, to be honest with you. So there's no annual reviews. You can do 30-year loan terms. And we often find that's probably the most attractive part, is those longer loan terms, because the rate's obviously going to be higher. You're going to pay in the 5% to 6% range for an Alt Doc commercial loan. But then because you can do a long loan term, it's often better sometimes a result than doing a fully verified commercial loan at 20 years with annual reviews. In addition to Alt Doc, where you're self-declaring income providing VAS or account letter or business bank statements, we also have lease doc options, where you don't need to provide any of that except the lease to verify servicing. Our True Boo loan is our best in that space at the moment. You need at least 2 years, though, left on the lease term. I'll also stress that when we're looking at tenants at the moment, it's almost like looking at the actual applicant. So we're going to make sure that you're not in a COVID-impacted industry, the tenant that is, and we're going to make sure that that tenant has a bit of a contingency plan if they are impacted. So it is a bit more difficult, the lease doc space at the moment, for that reason, but it's definitely an option there, particularly, if you're looking for a situation where you want to just avoid all the self-declared income and going for accounts, etc. Just give us the lease and we'll work on it from there. The rates aren't too bad, 5.35, and the loan term again is long for a commercial where it's a set and forget. There's no annual reviews either with those lease stock loans. So I like to talk about obviously the positive Alt Doc loans, and I've mentioned before, I believe this is going to be a growing part of lending in the next 12 to 18 months. And I believe that all brokers should be prepared to get more inquiries in this space due to the current economic climate with COVID. So I like to sell the sizzle, but also like to sell the traps with Alt Doc loans. And there's 5 at the moment that we see week to week. There's 4 on this slide, and then we're going to talk about one in particular on the next slide. We see these every week, these issues. And part of our job here is to try and make sure that we sort these issues out or stop them before they come to the processing here, because they will, if they're not right, on their own kill the deal. So the first one there's Centrelink. makes sense that for many brokers, but I'll explain it now, that there's no problem using Centrelink income as part of a loan, an Alt Doc loan, but what you're declaring to Centrelink has to be the same as what you're declaring to us. So if there, you've got a guy declaring $60,000 from his business, but he's saying to Centrelink, oh, I'm only earning 30, that's not going to fly with us. These loans aren't designed to defraud our good friends, the federal government. We are not going to accept that. Now, we'll give you a chance to go back and to Centrelink and say, oh, I've revised my income, I'm back up to 60, and we'll get that statement and we'll go from there. And we'll use that income on that new revised statement. But we are certainly not going to accept situations where the Centrelink statement and the income that's been declared to us do not match. The second one that kills a lot of apps, and I've probably touched on it already, is GST registration. We get quite a few situations where people are declaring an income, say 100,000, 120,000, but they're not GST registered. It doesn't make sense. If your turnover, we're not talking about profit, but if your turnover is over 75, you need to be registered for GST. So that's not going to fly either. Now, again, we'll give you a chance to rectify it. We've asked borrowers in the past if there's been a genuine error from their accountant, that they can go backdate the GST registration, and then we'll accept it. So that we do give you an option. We're not just going to say no straight away without giving you a mitigant. But if that can't be done, well, then it's not going to work with us. The third point there is directors and shareholders. To be self-employed, you need to be a director and shareholder of the business. So we get situations where someone's a director, but they're not a shareholder. Well, obviously, then you don't have an economic benefit in the business. We get ones where they're a shareholder, but they're not a director. That's not going to work either. So we need you to be both a director and shareholder. You'd be surprised how many we get where that's not the case. And we get all sorts of stories like, oh, they're a silent director, etc. Doesn't wash with us. You've got to be on the ASIC report, otherwise we're not going to do it. Again, we'll give you the opportunity. There are opportunities if there's been a genuine error to maybe backdate those issues. If they were genuinely supposed to be a director, it's an accounting error. But generally speaking, it's a no if you're not a director and shareholder. The other misconception, and which causes issues with loans on a day-to-day basis, is that because it's a low doc or an alt doc loan, that you don't have to provide all the details. So there was this bit of a perception in the past that a low doc loan was low doc because you only had to supply a bit of information on the income and that's about it. Well, that's not the case these days. These are coded loans, so we need all the information. So we're going to need a full asset and liability statement. We're going to need your most recent statement on any other accounts that you've got. We're going to need last 3 months last 3 months personal transaction statements to verify your living expenses. So low or alt doc doesn't mean you have to provide less documentation in general. It's just an alternative way of verifying your business income. So I think we even get it, I think I heard one of my colleagues yesterday was talking about this to someone. You do need to still provide all the information as if you're providing a normal, fully verified loan. The last one, which is an addition to this slide, is of course COVID-19, the good old coronavirus. Now, obviously, this has obviously placed a lot of pressure on self-employed businesses, and as a result, there's been a lot of policy changes in recent times about how do we mitigate, from a lending perspective, the risk in terms of self-employed applicants and the impact of COVID-19 on the business and industry. So the first thing to say up front is that we are more than happy to work with self-employed applicants if they have been impacted by COVID-19 in the past and now they're back on track. So, and in fact, alt doc loans, as I've mentioned before, really lend themselves to this type of situation. They do lend themselves to the business that might have had a bit of a downturn in turnover in March or April in certain states. And then since then, it's really picked right back up again. So we look at the last 6 months and we're going to look at and go, yeah, mate, your business is back on track. We're happy with it. So it really does lend itself to businesses that are even a little bit impacted by COVID-19. It also impacts another type of business, the business that hasn't been impacted by COVID-19 at all, or has actually gone better because of COVID-19. I've got a couple of applicants in here at the moment where their businesses are takeaway vans, etc., where their businesses has gone up. So again, alt doc loans are really great for these side of businesses because, again, we're looking at the last 6 months. So if they've had a real boost from COVID-19, we're going to get those 6 months with the BAS or the bank statements, or the accountant can talk to us about it, and it opens up an opportunity for them, which may not have been there if you look at the 19 financials. So it's not necessarily a bad thing, COVID-19. It's actually a positive for many businesses and from a lending perspective. But to make 3 points here, we're not going to accept anyone on JobKeeper. So any business or any business that's paying their employees JobKeeper, we can't accept at the moment. It's just a blanket rule. Now, if you've been on JobKeeper and come off because things have gone back to normal and things are going well now, well, that's okay. We're happy to look at you. But if you're on JobKeeper at the moment, no. We do need an impact statement. So even if you haven't been impacted by COVID-19, we still need you to say, well, we haven't been impacted, but we have a contingency if we do get impacted. And we have a template we send out with our applications which states the questions we need to answer. The most common pushback we get here is, oh, I haven't been impacted, so I don't need to do the statement. Well, yes, you do. Because even if you haven't been impacted, we still want to make sure you've got a contingency in case you are impacted. The last point there, and I did touch on it earlier, is business bank statements are now being asked for if you are in a business that has been COVID impacted or currently being COVID impacted or an industry that's been COVID impacted. Now, as I said before, business bank statements usually are a least preferred option, but they are a necessary evil at the moment because, as you can imagine, there's underwriters cowering under their desks at the moment going, oh man, I'm really nervous about writing a loan at the moment for self-employed applicants in Victoria, or I'm really nervous about writing a loan for an applicant that's in the tourism industry, etc. I mean, we all understand some businesses haven't been impacted and some businesses have done well. Therefore, providing business bank statements shouldn't be a big deal. It's just giving everyone a bit of extra comfort that if you have been impacted or there's a chance you're being impacted, we can see that everything's still going all right there in the last 3 months or so. So yeah, just to reiterate, we're happy to work with you on COVID-19 impacted businesses, or if they have been impacted, but we're not really interested in businesses that are currently on JobKeeper because that's telling us that you're still not out of the woods. Now we talk about Alt Doc loans, self-employed people, but we'd be remiss not to talk about another way to do self-employed applicants, and that's using 1 year's financials. Obviously, 1 year's financials is very popular with lenders, including ANZ, and we have a couple of 1 year's financials options as well. Probably an important thing to note is that even though they're an alternative to Alt Doc loans, we often ask for much of the same thing in the end anyway. So if you're using 19 financials at the moment as the 1 year's financials, look, we're going to want something more recent anyway to tell us the business is still going all right. So you often end up providing last 2 quarters BAS anyway. But at least there is an option to provide the 1 year's financials at a lower rate than what you would get with an Alt Doc loan. So as you can see there, we can do down to 3.69 at 1 year's financials, but probably the major limitation with us is they are only up to 80% LVR. I'd love to be able to do 90% LVR, like ANZ, for example, but we are stuck at 80%. And there is a little bit more conditions there as well as far as to get that best rate, 4-year ABN requirement and a credit score over 700. If we can't meet those requirements at 80% LVR, we can go up to the higher rate with our Capital Uber product. But again, you're going to need to provide more than just 1 year's financials at the moment. You are going to need to provide last 2 quarters BAS or last 3 months business bank statements at least to show that things are still on track. If you provided 2020 tax returns and financials, that would be a different story. We'd probably be more than happy to go with those. But yeah, if you're providing anything from 2019, you are going to need to provide more information anyway than just the 1 year's financials. You see there's a bit of flexibility too around 1 year's financials, and we still can pay a tax debt with a capital loan, and there's construction there as well. So yeah, so we don't see a lot of 1 year's financials because of that limitation of 80%. But yeah, if you do want to get the sharp rate, then that's certainly something to consider rather than looking at the Alt Doc option. And again, we'll talk through that in the scenario if it's a possibility. So that probably concludes the Alt Doc part of the presentation. We're just going to briefly touch on one of our other probably top selling issues products at the moment, and that is around SMSFs. We do have a wide range of SMSF options in both residential and commercial at the moment, up to 70% LVR. And probably the most important 3 rules around our SMSF products are the 3 dot points on this slide as you go down. We can't do new properties. They must be at least 12 months old. We need a minimum $150,000 in the fund prior to the transaction. and we do need 10% liquidity in the fund after the transaction. There is some flexibility around commercial around those requirements, but certainly of residential, they are the three sort of blanket rules that we look at. There is also some of our products where you have to service them outside the fund, which can be a little bit of a difficulty at the moment. But we also have options where you only need to service inside the fund. So again, if you like our Alt Doc loan, we have 10, oh, not 10, but at least 5 different product options in the SMSF space. And as a result, again, just give us a scenario and we'll find the best solution we can. It might not be at 4.99 for residential. It might be in the 5s, the end result, but we will try to find a solution for you. Again, it's the beauty of dealing with a mortgage manager like us. A lot of products, a lot of solutions, and we'll give you the best product and solution for your particular scenario. Just want to talk about processing quickly before we round out. So in the current environment, as you can imagine with COVID, etc., loans are taking longer to process. There's no doubt about that. There are additional questions that weren't being asked previously. And as a result, it has been obviously seeing our turnaround times blow out. And it's just unfortunately, I know it's an industry-wide problem at the moment, and it's unfortunate that it's happened here as well. But as a solutions provider, we do obviously get a lot of loans that have been declined elsewhere. We do get a lot of loans that are quite difficult, and that does obviously sometimes mean more questions and sometimes needs a longer turnaround time to get them turned around. We are going through a transition here with our credit and processing at the moment, which will lead to better outcomes, we believe, in the future. Our former credit manager, Paul Cameron, is retired. And we do have a new credit manager starting on Monday. So there is a bit of a transition process here at the moment as well. So that has probably also delayed things a little bit as far as improving turnarounds, but these things will improve in the next 1 to 2 months. And we're confident that time it's taken to get turnarounds the last 2 to 3 months will certainly improve. But unfortunately, the questions are still going to come in this environment. We can't do much about that. That's why I know from the BDM's perspective, that's why we ask so many questions up front, to try and make sure that we get everything we can on paper from the outset, which will obviously improve the turnarounds and the overall proposition from servicing later on down the track. Just note that last point too, that as part of our verification process here, we do ring applicants. Now this isn't so that we're trying to catch brokers out. Some brokers feel uncomfortable that we're ringing applicants. They sort of say to me, well, don't you think this is a genuine applicant or application? That's not at all that. It's really just part of our compliance that we ring them, and it's not an interrogation. We just like to make sure that we're getting all the asset and liabilities accurate on the ANL, because as you all know out there, not every applicant tells you the truth. So that's what that is about. So yeah, just processing will improve. So just to recap, as I said, we are market leading in Alt Doc, and it's not just because of product, it's because of the expertise we have here. Like I mentioned before, the BDMs here have been here a long time, or have been involved in Alt Doc lending for a long time. Our credit team has been here a long time too, and they also have obviously covered a lot of Alt Doc loans in their time. So it's not just about product, it's about the expertise, it's about the solutions provider. Like I said before, there'll be lower rates and fees out there, but is it the most suitable product for your applicant? That's what our job is to tell you here. We'll give you the most suitable product. I'll be the lowest rate and fee, but it'll be the most suitable product. You might save yourself a lot of heartache down the line. You come to us first, and we can talk to you things like about GST registration, things about, is this account letter going to work? What do we need to look at another one? Will the lowest rate and fee be able to get you the best option for your applicant in those situations? So reminder as well, we have current specials at the moment on Alt Doc loans, the 2020 cashback. So that is obviously going to help applicants who are worried about the fees involved with Alt Doc loans. And also remember that this is a great opportunity in this space for you out there at the moment. Lenders have pulled out. It's going to be more difficult for applicants to get a loan with their existing lender if they're self-employed. So it's a great opportunity for brokers to tap into this space. I understand in the past, as I've said before, some aggregators have indicated there's a reluctance to look at these loans for their brokers. Some brokers themselves have been reluctant. I get calls every week saying, oh, I don't usually do this space, or I don't really look at alt doc loans, or I try to avoid this space. I guess what I want to get out of this presentation today is try not to avoid this space. There is opportunity there. We're here to help you. I love alt doc loans, and the team here loves alt doc loans, and we are here to make sure that you can tap into this important market. So that concludes the presentation. What we're going to do now is hopefully go through some questions that have been generated during the presentation. So hello everyone out there. I can see you all now again. And we've got a list of questions here, quite a long list actually. So I'll read through them. And firstly, we've got our first question. Sorry, just while I go through this, I'll get this up on the screen. Can we, Andrew? It'll be a lot easier for me to read if I get it up on the screen. Yep. Okay, so just bear with me while I get this up on the screen. So just bear with me. Some good questions here if I can get it up on the screen. The first one, there's one I can just see briefly there a part of in regards of super withdrawals. Here's a popular question at the moment, isn't it, boys? Super withdrawals. Can we use it as part of funds to complete? No. That is a categoric no.
No.
Withdrawn super. So
No. Super. Cash out.
So please don't talk through the. I don't know why we're getting some people that aren't muted here, but yeah, just press mute all because there's people barking questions at me here that So we're just going to go off the typed questions, everyone. So yeah, no super withdrawal. That's categoric. Favourable purchases. Yes, we can do favourable purchases. They will be based on the contract price, okay? Not on valuation, on contract price, okay? Now, next question from Fred Morelli. Hi, Fred. Good to hear from you. Is the Uber product rates for accounted letter only? No. No, of all Alt Doc loans, it's important to remember, with all Alt Doc loans, you can provide one of three things to verify income: BAS or accounted letter or business bank statement. So anything you've seen here today, you can provide one of those three things and it'll all be the same rates and fees, etc. There's no extra or additional rates and fees if you just provide an accountant letter. So thanks for that question, Fred. We've got Steve. I think he's referring to Alt Doc loans. Can we do SMSF purchases with them? You certainly can't. If you're talking about SMSF loans in general and they've got impaired credit, no. I believe Liberty will look at some impairments with SMSFs and perhaps Latrobe. From our product range, no, we don't look at impaired with SMSF at all. Marianne, hello Marianne out there. Are we able to use job seeker payments? No, so no job keeper or no job seeker payments.
No, she means job keeper.
Definitely no job keeper, no. So if they're on job keeper, it's not going to work with us at the moment. If we scroll down, hopefully there's some more questions there. Andrew, do we accept residential properties? And yes, of course we do. Yeah, so we accept residential properties and commercial properties with all our loans. So if it's SMSF or Alt Doc, which we've talked about today, that's not a problem at all. Just remember that your maximum LVRs, they will be a little bit less with the commercial loans, down to 70%. We've got Elsie, very close to my daughter's name. True Blue lease stocks, have we got any associated fees? Yes, there's fees with any lease stock loan. I think you're looking at a 1.5% establishment fee on a lease stock. That's before valuation. So bear that in mind, that you are looking at it probably around, when you add it all up, probably at least around 1.5 to 2% of the loan amount in fees on a lease stock loan. We've got Corey here asking, who are our funders? Well, our main funders that we use, as I've already mentioned today, are RedZ for our self-employed Alt Doc, but we also have a wide range of other funders we call upon. Some of them you can access directly, and some of them you can't access directly. So there's the likes of Pepper, Resimac, Syntex, Loanworks, Adelaide Bank we use, and also one very good funding source we have called Wellnigh, which is doing some of our high LVR 95% genuine and non-genuine savings products. So we have a number of different funding sources, and like I said, you can access some of them directly, but often we'll have a better rate and fee than what you might get directly. And sometimes we've got products you can't get directly with those lenders, so the funders. So it's always worth trying us as well, because not only can we give you the best rate and fee of all those funding options, we can also perhaps have a better option than what you would go to if you went to them directly. So just remember that. We're just looking through some more questions here. There's a couple of direct scenarios that have come through here. We will address those after the presentation. Let's have a look here. This is a great question from Peter. Do we have to include, and I'm probably a little bit probably down on myself, I didn't mention this actually, around servicing and Alt Doc loans. We should add that next time. Do we need to have any sort of business liabilities in servicing with Alt Doc loans? No, you don't. So with servicing on Alt Doc loans, we are only interested in personal debts in servicing, because the income that should be self-declared by the applicant should obviously be taking into account business expenses, and then we're getting the net figure. So we don't want to double dip. So no, you don't need to include any business expenses like asset and equipment finance in servicing, just the personal debts. Let's go. We'll just go through a few more questions before we're done here, Andrew. Oh, Wade. Hello, Wade. How you going, mate? For commercial properties, does the borrower need to be an individual? Can it be a corporate trustee? It needs to be a company borrower. Yeah, so we're not going to do individuals, so it does need to be a company borrower there. We've got some more questions there. No? Okay. I'll just quickly refer to this sheet here in case there's something we have missed. I don't think we have missed anything there. Okay.
What about using residential and commercial properties?
Well, what do you mean, like
Doing commercial loan using a residential property as
a
additional
commercial loan
security?
using a residential property? That's a very good question, Andrew.
That was one.
Oh, that was a question, was it?
Yeah.
Commercial and residential property.
Yes.
Look, we have a bit of an issue with some of our funding where if it's used for a commercial purpose but it's zoned residential, that's not on. Alternatively, if it's been zoned commercial, but yeah, okay, so I'll backtrack. If it's been zoned residential we're using for commercial, we're not okay with that. But if it's zoned commercial and it's been used obviously for commercial purpose, well, that's no problem at all. So yeah, so we do ask for zoning in these situations because we do see situations where someone's got a house and they're operating a business from it on a main road, but zoned residential. We do have an issue where we can't accept that due to funding restrictions. So
no, the other question is, so like some of the banks, if I'm doing a commercial loan and I'm taking commercial property as security, can I cross-collateralize my residential property?
You asked some tough questions, Andrew. Oh,
That was another one. Sorry.
Okay, we can't cross-collateralize residential and commercial securities. So we will do individual loans for both, but we will not cross-collateralize commercial and residential. So we can do, obviously, if we're talking about Alt Doc, we can do obviously Alt Doc and residential commercial, but we're not going to do it across one loan, no. Okay, so is there any other more questions coming through?
No.
Wow, okay, you're quite a bunch today. So on behalf of the team, Shane and Andrew and Murray, who's no longer with us, we'd like to thank you for.
Well, he's still with us.
I believe he's still with the business, just not in the room. Otherwise, we're in trouble. Otherwise, you're in charge, Andrew, and that's going to be interesting.
Well,
So, anyway, thanks for coming along to the presentation today. I hope you got something out of the presentation as far as Alt Doc loans. Many of you have written this type of business previously, so a lot of this would have just been probably revision for you. But hopefully there were some others out there that haven't written this previously, which have got something out of it. And like I said, we're all contactable. Our contact details are at the bottom of this presentation. This presentation will also be distributed on our YouTube channel after this. It has been recorded, so feel free to review it, send it around, and send us a scenario. So on behalf of the team again, thanks for joining us, and we look forward to seeing your scenarios in the future. Bye everyone.